Like, there is no subscribe for hot signals that'll just, you'll be laughing all the way to the bank.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prischmann.
Well, John, we've had some stock market turmoil, and our governor is now a vice presidential candidate. This politics in the markets, or what's going on?
It's my favorite. I like to discuss it day and night. I did like commodities better when they were less political. So we got our governor is headed to the ticket, it looks like. And I don't think that's going to affect policies too much, but I guess he's biofuels friendly, whatever that means. There's so many different proposed laws and stuff on the books. It's kind of complicated. That's something I wish I knew more about, but apparently he's friendly to that. But there's going to be other guys that see other weak points that he might have, and we'll just leave it at that. So we'll let that politics play out. But yeah, that triggered some phone calls. There's people from other states that they're curious and they want to know what I think, and then we have some laughs and that kind of stuff. But lately, it's been affecting, unfortunately, it just spills into commodities. And then, of course, he had a stock market correction. Now, we can't have that. The Fed's on the case today. They were talking about a bond buying program or whatever they need to do for the next auction. And, of course, we almost had a 3-day correction. We did a 3-day correction, but that's just too much to bear. So they stepped right in and fixed it today. So if we can really hammer out a fix on these markets, we'll make sure it never goes down a day. I mean, I think that's what they're working on right now. But no, I kid. It's really annoying, but a guy should actually partake in this. Like, he goes down, causes a lot of volatility. The problem is you get a market like cattle, it follows the stock market down, but then it doesn't follow it back up. And that's where we are in cattle. Grains were an interesting thing, and I did call it perfectly yesterday. I felt that they would be up because in order to shuffle money around and get out of positions, the funds would actually have to buy the grains. Very unique that they'd be this short to where that it affected the market. They bought positions back, shuffled some money around, to pay for margin calls and whatever great markets they're invested in, Bitcoin or who knows what, office buildings, I don't know. Anyway, when it shuffled around, they would have to buy their contracts back, so grains were up, and it couldn't even do that for 2 days in a row. So light shuffling and right back down for the grains. So it definitely affected the markets a lot. Cattle, though, it just same thing over the years. It goes down with the stock market, but never up with the stock market. So it's kind of very rigged for the cattle guys. I do feel for them. We're, $15 under cash. Feeder board was like $18 under cash. At this time, I remember last year saying, boy, feeders look expensive. They're $16 over cash. And then that was near the top of the market. Of course, I didn't do anything that day, but this year it's got the opposite feeling. We're way under cash. What to do? It does trigger a lot of phone calls, and it does provide opportunities. Of course, we're not going to make recommendations here, but these are the kind of markets like people get angry about, but I see it in a different way. I take the high road and try to make money at it. So we'll see. It's been an interesting week so far. Nobody has anything figured out. We'll see if the stock market stays together for a day or two. Obviously, Japan factors in here. That's been going on since the 80s. So it's just like, well, it might be over or it might go another 3 decades. We have no idea.
It can definitely, those moves, they also only matter when they matter, too.
Yep.
So you can sit and watch those moves. That the rate increase that they said was the issue actually happened at the July 31st meeting. So a week later we get the reaction. So what was the real reaction?
Yeah.
I think the key, though, is being aware that things can affect, or watching. Like you said, you thought there'd be some shuffling in grains. It was a nice
Green Day and soybeans. I mean, it's been a while since we've had 14 cents up, I think. I haven't watched back on the chart, and it wasn't even that huge of a day.
Yeah,
but
that's why
you can watch for those things.
That's all we do, or all I do, is looking for something that's going to trigger something to get in something and make money because that happened. That happens 100 times a day. But when you get this volatility, it really steps up the process a lot, and the speeds are a lot faster. I like volatility. I especially like days like today where it's still volatile but a lot calmer. That's usually where I like a cat jump out of the bushes for a gopher. I just wait, let everybody go crazy, talk crazy on Twitter, and then when the craziness stops but it's still volatile, that's where I like to get in.
Yeah, I mean, from our seats, right, where we have the computer up in front of us most of the day.
Yep,
you're on the phone. Volatility is fun, right? I mean, it gives a little more to do than not volatile, but it's not true when you are the producer. You got to be in the field. Volatility brings opportunities, but it also can bring a lot of risk.
Yeah, and it can flare up out of nowhere. We saw that in beans where it was hot in the forecast, so it was just isolated to beans and corn, and it went up a tremendous amount, and then the forecast shifted real quick again. And that created a bunch of opportunities. I love that volatility when it's a little more focused. These kinds of events just cause pure chaos because you have money shifting around and it doesn't have anything to do with cattle or grains. Like I think if grains were in a more neutral position or slightly short or slightly long net long, that the grains would have got demolished yesterday like they usually do. But it's just anticipating these moves and knowing where the fund positioning is and where the money's shifting around. That's how you're going to make your money. It could be walnuts or cumulus clouds that you're trading on days like that. No one cares. And the underlying asset really doesn't have anything to do with the price action. It's just all that money shifting around and anticipating what's going to happen because that happened and then trying to make money at that. That's what yesterday was about. I kind of missed a couple good ones, but it's better to be safe than sorry on days like that. But usually out of the wreckage comes a lot of opportunity. This used to go on for 2-3 weeks. Nowadays, again, we can't have a correction. That's too much. So it usually only lasts a day or two. And that's exactly what happened here so far.
So far, yeah. And it is something to watch. Is this just a bounce in the equity markets, or are we back up heading towards the highs? I think SPX on the stock market is about to hit an all-time high. I think $2 away. A lot of the tech stocks are back towards all-time highs today, which compared to the last, like you said, 3-day correction, they were way down. So,
and it's also the time of year where anybody can say anything they want about grains, and they're right, because nothing can be proven or disproven. It's too early to know what the yield is going to be, but you look at this weather and the shift in August. This is exactly what you'd want to see, But, of course, then you're going to have the bulls jump on, white mold, or it's going to be too wet, or it's not going to dry down. It's just like, I'm sorry that you're going to have drying costs, but that's not going to affect the markets. We're going to need a nice September up here to finish, ideally. But, again, not everybody's focused on, northern North Dakota and Minnesota. There's bigger things to look at. And right now, I don't hear a complaint on the phone. That doesn't mean there's not plenty out there. I take that back. I do actually have a rather large client, and they haven't had rain all summer long. So it does exist, but it exists every year. And that guy knows that, and it's just unlucky this year. But as a whole, it's just you don't hear much bad out there, and maybe I'll get beat up for that. But that's what I'm hearing. I'm also hearing a lot of grain in the commercial channels, a lot of trucks moving around still. Super abnormal for this time of year. Even if it exists on paper with the USDA's numbers, you don't normally see this much grain around, being hauled around, being moved around, being called and asked what to do with. I don't remember last time I have had calls in August asking what to do with anything, maybe soybeans, but generally decisions have been made a long time ago, or there's none left, or a very little left to sell, and it's all in commercial channels. It appears that we have a lot on farms and in commercial channels in front of what looks to be a very big harvest. Not a great combination if you're a bull, but you'll find a lot of people arguing against that, saying it's not out there. You'll see, and yeah, we will see. I think you were just talking about this earlier. If it actually isn't out there, it does show up. Like the one year in 2020, which I wish never would have happened, It actually showed up fairly early. By October, it was pretty apparent. August put the low in after the very bearish report, famously bearish. Then you had the big windstorm in Iowa, which I call it that because I always screw up the actual name.
Yeah, I won't even try.
It was
either.
super windy. and then
inland hurricane, whatever those things are called.
Then the price started going up the day of the report. It made a low on August and started going up, and the funds started investing heavily. Like they almost knew what was coming. Anyways, China started buying every single day. They actually started that in mid-August. We don't have any of that stuff going on this year. I mean, like it has zero even close cousins to what that year was.
We don't have any of that going on.
None.
Yet.
Yeah, Ever the optimist.
That's
right.
right.
You do have to keep an open mind. If China were to buy every day and it started to look like that, I would change my mind. That's my overriding factor is doesn't even have to be China. If there's demand every day and it's clearing out those commercial channels, time to get maybe a little more bullish, no matter what the USDA's numbers are. But that's not happening. They have been buying beans, but they're so far behind where they would normally be, it isn't a story. And corn demand's actually pretty good. Exports are good, but still nothing to move the needle to where the next report, they're going to make big adjustments. But then we got another report on Monday. And, of course, this is the one. They're going to reveal the big reveal. The grain's all gone. I think we've heard this for the last 12 reports that this is coming. So we'll see if this is the one. And I say in quotation marks.
Right. It might be. But you and I have both heard from a lot of people. The grain's not out there. It's not out there. And a lot of times I'll ask the person who's saying that, well, do you have corn on your farm right now? Oh, I do, but it's not what the USDA says it is. At this time of year, how often do you have corn? So being aware of that for the numbers is if it's not out there, those numbers have to start showing up somewhere. That front month contract's going to start going up sometime. And
I have all kinds of wonderful plays that are actually very low risk in the deferred stuff that work very good on low, like when it gets tight, like low stocks years. And then you suggest this to the same guys and they have no interest in actually putting their money where their mouth is, But I do. I have, if that isn't the case, you go back to a few years ago where it was tight. There's some very good plays that you can look at where it gets weak this time of year. But then as you look towards spring, it gets very strong. And again, we're not going to give out recommendations, but it's in some of the corn spreads. But when there's a lot of corn around, it tends to go to a real wide carry like last spring. And that's really what I gauge a lot of stuff on is the spreads. The spreads up front are telling us that there's a ton in the commercial channels. I just don't know why guys trade against that. Until you even see those start moving, it's really hard to be bullish for me. But, I don't know. That's just the way I trade.
Yep. And there could be changes, like you said. There's things to watch for. There could be market moving events like yesterday that will take short-term
could be frost
advantage. Could be frost.
Yeah.
Watch that side. And again, even on a frost side of things, who's got the best meteorologist predicting that? It's not the guy on the TV news, right?
No, it's the hedge funds. And I've been saying this for a number of years. People really underestimate how big the commodity markets are, how much money's involved in the middle and the top. And they also underestimate, like for energy companies or transportation companies, how important the weather is and how much money is on the line every day with having good weather. So you have these up and coming guys with their models and you see this, stuff on Twitter, but the truly good guys with talent are snatched up by these hedge funds. And I have no proof of this other than just common sense. And they're paid not to say this to anybody but the people they work for because it's millions of dollars on the line every day. You know the weather before other people, and you're going to make a lot of money in a lot of different industries and companies. So that's where the talent is. And you saw that just happen. It was hot and dry with the weather that we saw, but all of a sudden, mysteriously last Friday, the thing caved in. Who would sell it in front of a really hot and dry weekend with the funds this short? Well, if you kind of know the answer to the weather shifting, by Tuesday, then you would sell it. And sure enough, we get to Tuesday and a big wet and cool front's coming. They knew that way before. They knew it last year. They sold it way before the rain came and the pattern changed. To me, it looks clear as day that these guys are one step ahead of us on the weather, and they get a hard time. And, you might want to think maybe the funds are on the right side. They had been driving the prices up for the last few years, and now they appear to be on the right side to me. But, eventually we will find bottoms here one way or the other. But generally speaking, seasonally, there's more weakness August, September. Not always, but that's not uncommon at all.
I think it's important to point out we will find bottom at some point.
Yep.
Making plans now. We may not want to make any moves now, but if you want to be bullish or you want to look for a spot to hedge, planning now is the time to plan is now.
Yeah,
right?
I look at some of the hedges for some of the guys that, that they hedge well and they are aggressive, and it's not always correct. Sometimes the price goes above, but they're profitable when they hedge oftentimes. And, a lot of this is May 2023. I look at some of the corn and bean contracts, and most of it's last year, and the rest of it's on all the run-ups in between. So, yeah, I'm already planning for 2025. Absolutely. Just like your high school coach of football says, just keep those knees moving. You just got to keep going. And it does look like, and I, of course, don't have proof of this, that December 25, I am in a spread that does have that one leg in there. So I've been watching it pretty close. And December 25 looks to me like it's been getting hedged against pretty hard. And of course, you don't know the other person on the other side, and you couldn't know that they're hedging. But it's been abnormally weak for about 3 or 4 days compared to the rest of the new crop complex. So it does look like that some hedging's been happening out there. But I definitely am coming up with strategies that I can put out in front of guys, say, hey, there's this if you want to do it, and you certainly don't have to, but at least getting it going. Like, maybe it didn't go good in 24 for you, but maybe if there's a chance we can fix it in 25. Those are the guys that usually do better than the other guys that just get mad and say it's not out there. I'm not saying get out there and hedge at all. This is actually usually a pretty bad time, especially for the next year's crop. But is there option plays to do? Is there a combination of futures and options? Is there anything we can do? Sometimes the answer is no, and sometimes the answer is definitely yes. And again, I am working with guys right now to try to figure this out. And we have done stuff.
Yeah. I want to point out while you're talking about some of these charts and spreads and stuff, we are looking to grow our Twitter channel. So it's I think it's Hedge Heads. I think it's just at Hedge Heads on Twitter. I should probably know that. Yeah. But search for Hedge Heads on Twitter. You'll find us. So where we can maybe share. We need to grow this out and build. We're working at. We're trying to get there.
That's our social media guy right there.
That's right. Yeah. I know of not what I speak. But no, that's why I have people who do social media for my social media company.
Yeah, they're called young people.
Right. Number 2, we are working on. We would like to try and develop some sort of room where we can maybe share more detailed and quick hits of markets that we see
that are grabbing our attention. But again, no recommendations for 2 reasons. You legally can't do that. Number 2. I'm just not a big believer in the newsletter, one-size-fits-all sort of guy. I think that's where you begin in your commodity journey, but I think it's a lot more on a personalized level. So I would like to talk to each individual guy before we put anything on. Let's say I want to do an option strategy. One guy might just be a futures guy, and he's just going to be short or long futures, where the next guy doesn't want to do any of that, and he doesn't want margins. He might have a huge account, but he still doesn't want that. You just see everything. So I don't like the one size fits all. I do not like the automatic signals. I don't like any of that stuff. And I'm not saying don't do it. I'm just saying I believe that's the beginning of your journey. You'll learn lessons from doing that and then hopefully transform into a combination of getting good ideas in front of you and then you just simply choosing what you like out of that or pieces of that idea and just implementing it. I just don't like that newsletter style stuff. But that's my taste.
Well, and there's times where recommendations can be good for 2 to 3 weeks. For instance, a real one that we did almost, I would say mid-May to at least the second week of June was buying $10 puts on soybeans, November beans. turned out to be a great one, but that one we specifically did recommend to clients at that time.
And,
and it was good for 4 weeks. Other times a recommendation in an hour, we may no longer recommend that because the markets can change.
Or it just might have been a bad idea. Yeah,
well, that's true.
We've done that 5 minutes later. I don't like it. But I what inspired me with the bean puts this year is that the May-July spread in beans, when I saw it do what it did, and I experienced it firsthand, then I was a lot more bearish beans because I like to read the spreads. So that one, after I did not do well in the May-July bean spread, I realized, well, there's probably some downside here, or at least fundamentally the spread say so. So, one thing led to another, and that's you try to read the markets, and again, you just stay with what the markets are telling you, and you look at the time of year, you look at the fundamentals, you look at everything, and it's just hard to be a bull right now. So we're still looking at ideas, although they're a lot tougher after it falls. But on that side, but still, it comes to a point, like you say, where the bottom comes in, and hedging's great, but I still find one of the hardest parts, and even just buying puts or calls, is knowing where to get out, and that's where I struggle personally. Like I can get you to the good spot, and then I like you driving after that because I tend to think I can wiggle and waggle with the market perfectly. And that just doesn't usually live up to reality at all. But no, it gets to be a transitional time of year, and but I like to look forward to the bulls. There's definitely stuff you can do in the deferred stuff, and then for the bears, there's still plenty of stuff left over for the next 2 months.
Absolutely, but like you said, it's there's rarely a one size fits all approach, and that's the core of. If we figure out how to distribute this info, it would be much more related to here's a general overall picture, here's a market that interests us, but let's chat one-on-one because each person's situation.
Yeah, I'll have like a corn idea, or let's just say cattle idea. The first guy I talk to might, and let's just say I think it's underpriced. The first guy might just buy futures. Like I know this guy for 10 years, and he doesn't, cattle futures are nothing to him. The next guy might not know much about cattle, but his brother-in-law told him that try to get in cattle. We'll come up with a strategy that has maybe less risk, and look at call strategies, bull call spread, or variations of that. And keep the risk minimal. And the next guy might be a guy that I do a lot of spread trades with, and he's not interested in puts or calls or futures, but he wants to be in the spreads. So that's what I say. One size doesn't fit all. Like, in just the same exact idea, you have 3 completely different trades and different mentalities. And I see that every single day with almost all the trades I do. I like to add the spread side of stuff. I know it's not common in the industry. I just don't know how anybody does anything without looking at them and knowing where those spreads belong. But that's just, I'm biased. That's what I've liked since I've started.
Yeah, makes sense. Well, Jon, we should probably wrap it up today. Any closing insights you want to share, or just leave your contact info?
Well, it's the dog days of summer. I should go out and do something productive, and I say this every August, and then I go outside and it's too warm, and I go right back to that air conditioning. Today's the day, though. I think it's only like 72 degrees.
It's beautiful out.
And all I do is mow lawns this summer. Like, all I do is mow lawns. When I finish our lawn at home, I start where I left off, because I usually do it in 3 days. Because why would you do it in one day?
Right. And then you got to go mow the cabin too, I suppose.
Yeah. Well, it's everyone's tubing and having fun out there, and it's split between some brothers and sisters. But I have not seen a lot of lawn mowing out there besides me. I shouldn't say that. My brother has done his share, but it is growing like crazy. I would imagine there's plenty of hay out there, and the cattle look like they're going to be fed well here. Going into summer. But yep, back to being productive. I just have to figure out what I'm going to do. I have a lot to do. I just have to figure out what I kind of want to do, and then I should do something. Probably mow lawn.
Yeah, mow the lawn, or hang out in the AC and watch a movie.
Or I could do the other side of my boat that needed it very badly because the white had turned yellow. But I only did one side, and that was 3 weeks ago. Today might be the day for the other side.
I like it.
Yeah, I got things going on.
Perfect. Well, thanks again, John, and we'll talk to you soon. Oh, you didn't leave your number.
218-731-1578.
Thanks, John.
That's all we do, or all I do, is looking for something that's going to trigger something to get in something and make money because that happened.